Hello, good morning and welcome to ET Now's the newspaper show. For the next half hour, we'll be walking you through the major headlines from the Times of India as well as the Economic Times. But before we go any further, let me remind you that newspapers are completely safe and virus-free. They are not a source of contamination for the virus, and all delivery personnel are taking the highest protocols and wearing all the required PPE. So if you are interested in getting your newspaper delivered to your residence, please go to wantmypaper.com where you can explore all the options for delivery. I repeat again, wantmypaper.com if you are interested in the newspaper. With that being said, let's get a move on. We have a lot to discuss this morning. Top 10 stories from the Economic Times. The IIP contraction rate has slowed in May. Blanket moratorium not needed beyond August, says SBI chief. M&M may exit few businesses. Bajaj to beef up Southeast Asian presence. Zamato rev more than doubles in FY20. Netflix, WeWork sign a deal for Mumbai space. COVID-19 vaccine only in early 21. Textile industry seeks loan rejig. SC permits notices via instant messaging tools. And China says will hit back at US sanctions over viewer rights. So that was the top 10 Economic Times stories of this morning. Let's now get a move on to the corporate stories. M&M may exit few businesses. Bajaj to beef up Southeast Asian presence. Stock options lift Techm CEO pay 28% in FY20. Voda Idea pays 2,900 crore towards matured NCDs. And Adani Australia CEO quits. So those were the top 5 corporate stories. Let's now move on toward the market. Wall Street ends higher on positive Gilead data. Blanket moratorium not needed beyond August, says SBI chief. Kotak Bank may change loan rules. Textile industry seeks loan rejig. And Bank of Maharashtra to raise 3,000 crore. Okay, so those were the headlines for this Saturday morning. Let's now get a move on with our individual stories. And the IIP contraction rate has slowed in May with the government withholds headline figure. So that's page 1 of the Economic Times. India's industrial production contracted 34.7% in May, slower than the pace in April. Computations based on official government data have shown. The figure reflected the gradual resumption of activity as the nationwide lockdown imposed on March 25th to contain the spread of COVID-19 began to be eased in May. The government said the number of units responding with data in May had improved from late March through to April. So the May mining sector output was at negative 21% versus 2.3% YOY. May manufacturing sector output was at negative 39.3% versus 4.4% YOY. May electricity output was at negative 15.4% versus 7.4% YOY. And there's a lot more metrics there, so if you are interested, do have a look at the article. It's on the front page of the Economic Times this morning. Let's now move forward to banking, another important story. We have the SBI chairman coming out and speaking last evening. And according to him, it seems that India will recover faster than many would think from the unprecedented impact of COVID-19. That is the word coming in from SBI chairman Rajneesh Kumar, saying that there is no need for an across-the-board moratorium extension and RBI should consider relief to specific sectors based on the data. Let's listen in.
Economic disruption caused by the pandemic is of gigantic proportions. The dislocation of migrant labor and disruption in domestic transport has adversely impacted the agriculturists, business units, suppliers, and exporters. It is uncertain as to how the household will react to this loss in income due to pandemic. There are predictions that discretionary consumption and consumption on durable items may slow this financial year. We are already aware that banks have absorbed substantial shock due to COVID-19 through the moratorium granted on payment of installments and interest by the Reserve Bank of India.
That was the chairman, Rajneesh Kumar. Let's now move forward to what Mr. Uday Kotak had to say. Outlining priorities for Kotak Mahindra Bank in the post-COVID era, Uday Kotak said the lender is well on the path to turn the crisis into an opportunity and play a role in kickstarting the economy. He also spoke about the COVID impact on macros. Comparing this crisis with 2013, Kotak said that unlike that time, India's external account this time round seems to be under control. However, there was a warning for the banking sector. He said that if 4 to 5% of loans turn bad, then the capital position of banks could be impacted by around 40%. Okay, so that was what Mr. Uday Kotak had to say about the current environment for banks. But in what's interesting as well, another important company, M&M, and it's on page 5 of the Economic Times, the Mahindra and Mahindra group is on a spring cleaning drive that will likely see exits from a number of loss-making units and divisions. The extensive divestment roadmap may involve either complete closures or stake sales so that the automotive major has a healthier balance sheet at the end of this fiscal. According to sources, many overseas subsidiaries are under the scanner. The tractor business in Turkey and Peugeot's two-wheeler ventures in France, where M&M has met with little success, may not get more funding support from Mumbai. But however, my colleague Vivek, who knows what's up with this story, is going to walk us through it. Good morning, Vivek. Could you take us through the fine print, please?
What's actually happened as far as M&M is concerned is that the company over the last decade has made quite a few investments, and these investments have been made in countries across the globe where the company has actually gone ahead and diversified, number one, both in terms of geography, and number two, both in terms of product profile. So, you're talking about the two-wheeler space, you're talking about the global truck business, you're talking about, some of the other utility vehicle businesses as well. However, what has actually happened is that a lot of these businesses have not ramped up or scaled up to the size to which M&M would have actually preferred them to be. You also saw that how around a month and a half ago, M&M actually said that they would no longer be supporting their loss-making subsidiary SsangYong. And again, this is something that a lot of analysts, a lot of investors had worries on regarding the fact that the company continued to fund businesses that were loss-making and in fact not actually helping the company reach its stated ROE target of 18%. So once the company actually said that it would stop supporting such loss-making businesses, you actually saw a complete re-rating as far as M&M is concerned. So this particular piece of news appears to be a continuation on the stated path of achieving an 18% ROE. And watch out for M&M, these are some extremely positive signs as far as that particular individual company is concerned.
Thanks for that, Vivek. But can you stick on with us 1 second? I was just wondering, do you have any idea? I know it's not clearly mentioned anywhere, but what the kind of funding that is currently going into these overseas ventures, or perhaps how much money they'll be able to save on an annual basis if they stop funding these overseas ventures? Also, any idea of how much these ventures contribute to the bottom line, or are we still waiting to hear from the company regarding all these finer details?
Well, a lot of these details, in terms of the bottom line, you'd actually be surprised to hear that on a combined basis, the USA business, the Europe business have all been loss-making, and they've been loss-making for quite some time. So let alone, reaching the 18% ROE, you're actually seeing a lot of these businesses not even being able to turn a profit as far as the bottom line is concerned. And, the other thing that you need to keep an eye out for is these are not very early or new businesses. In fact, a lot of these businesses are quite mature businesses. Clearly, whenever you diversify, exceptionally in a geographical manner. So every time you diversify and it's, into a new geography where you're not very aware or you're not very comfortable with the entire business environment, it's quite clear that a lot of these companies struggle to go ahead and adapt to the kind of business making or business environment that is present in those countries. So it's very clear that, M&M, which has struggled. But the good news is that, they've identified the businesses where they are loss-making at this point of time and clearly are taking steps to prevent any kind of further losses going ahead.
Okie dokie, Vivek. Thanks so much for getting that across to us. It seems that M&M is really focusing on cost efficiency, and if that means cutting off some unprofitable operations right now, so be it. The counter should be fairly active as well in trade on Monday. We'll keep a lookout for it. But switching gears a little bit to auto, Bajaj Auto is looking to beef up its presence in Southeast Asia. The company incorporated its subsidiary in Thailand last fiscal, looking to partner with local distributors. Bajaj has also set up an R&D center in Thailand. So now in focus, Bajaj Auto on the beefing up of its presence in Southeast Asia and looking to really partner up with a lot of local distributors. And all of this is commentary coming out from the latest annual report as well. And this was also on page 5 of the Economic Times this morning, excuse me. So now I think we're ready to move forward. Page 4 of the Economic Times. Food tech unicorn Zamato expects its net loss in July to be under 1 million, even as the COVID-19 has set it back by about a year in terms of the size of the business, the company said in its annual report. Zomato's revenue for the financial year ended March 31st and more than doubled to 394 million, even as losses widened to 293 million. The company expects a complete recovery in the next 3 to 6 months. Zomato's CEO Deepinder Goyal also added that the company had rolled back salary cuts announced in May when the company had laid off 13% of its workforce. Chandra Srikanth is joining in now with the details.
It happens to be the 12th anniversary or the birthday of Zamato, so they have released some numbers to mark how they have progressed over the years. While the business has gone up by over 100% according to the founder and CEO Deepinder Goyal, the costs have gone up only by 47%. But remember, they did take a significant hit due to COVID-19, because of which they also announced layoffs. Now, talking about the recovery, he said that the food delivery GMV is back to 60% of pre-COVID levels, and their burn rate for July will be under $1 million. Importantly, in terms of the contribution margin per order, they have gone from minus 47, losing 47 rupees per order, to plus 27, but they expect this to normalize between 15 and 20. So that's the amount of money they will make on orders instead of losing money like they were before. Now, importantly, positively for employees, they have reinstated any salary cuts that were announced, and for those who took on voluntary salary cuts, they have rewarded those employees by tripling the amount that would go into ESOP. So that's the way they are rewarding employees. And Deepinder ends on a very philosophical note, talking about the overall impact of the pandemic, talking about how tough times don't last but tough people do, and how they are hopeful of staging a comeback. But clearly for them, the dining business has taken a huge hit, so it's going to be some time before that comes back. But overall, they expect a recovery to happen in the next 3 to 6 months.
Okay, thanks for that, Chandra. That was on page 4 of the Economic Times this morning, if you are interested. Let's come back to page 1 and body armor for personnel on China. So the protective body armor used by security forces to guard against stone pelting in the Kashmir Valley will now be used by paramilitary troops patrolling the line of actual control to fend off sharp-edged baton and stone attacks by Chinese forces. The centre is preparing a detailed plan according to which each company of ITBP will have a full-bodied protector for at least 10% of its personnel. The full-body protector were first introduced in Jammu and Kashmir by the Central Reserve Police Force to counter stone pelters. They are resistant to kerosene, petrol, diesel and Molotov cocktail as well. Okay, let's now quickly get you the top 5 headlines from the Times of India this morning. Vikas Dubey has been killed in an encounter. COVID update, record rise of 27,000 cases in one day. India, China agree to resolve standoff. SC OK summons via WhatsApp and email. And amid pandemic, ICSE's 90% club grows. All right. Times of India, page 1, a very important story. Vikas Dubey has been killed in an encounter. Within 24 hours of him being nabbed in Ujjain, gangster Vikas Dubey was killed in an encounter early morning on Friday near Kanpur. This came 7 days after he and his men allegedly killed 8 police officials who had gone to nab him, said Uttar Pradesh police. However, with every passing hour, there are more questions emerging regarding his death. Just to remind you, Dubey was the dreaded UP Don who has over 60 cases against him and has killed 8 policemen in Kanpur last week in a shootout. So if you are interested, do have a look, page 1 of the Times of India. Let's now switch gears a little bit to the COVID pandemic and figure out what the latest updates are there. India's COVID-19 caseload went past the 8 lakh mark just 4 days after having crossed the 7 lakh mark, while the death toll has now topped 22,000. Amid a major surge in the pandemic, fresh infections crossed 27,000 for the first time, the third record high in daily numbers in 3 days. The day's death toll from the virus crossed 500 for the first time in 6 days. This was the second highest single-day count of deaths after the 608 reported on July 4th. Over 2.36 lakh cases have been reported in the 10 days of July as compared to 4 lakh in the whole of June. Okay, back to page 1 of the Times of India. India and China disengage at Galwan. Moving on to the India-China standoff issue, the Indian Army in this statement said that before the next round of Corps Commander level talks, both sides agreed to ensure complete disengagement and de-escalation. Officials agreed that it was necessary for both sides to sincerely implement the understanding reached between senior commanders. As agreed by the 2 special representatives, which was NSA's Ajit Doval and Chinese Foreign Minister Wang Yi, senior commanders will meet soon to discuss further steps. The officials said they would schedule another meeting of the working mechanism for consultation and coordination soon.